Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. Israel's defense minister accuses Iran of violating the ceasefire orders, intense strikes on Tehran. Iranian officials deny claims of any violation. All of this just 3 hours after President Trump claimed to have brokered a truce to end the 12-day conflict. Crude oil prices trimmed losses after claims of ceasefire violations by Iran, but oil prices still down over 10%, moving back to levels seen before the latest flare-up in the Middle East. Stock markets rebound across the world. The Wall Street rally loses steam in the last hour as the sensex and the Nifty end with minor gains coming off their intraday highs. India is keen but not desperate to sign the US trade deal before the 9th July tariff deadline. Sources say negotiations are stuck on agri, dairy and genetically modified crops. Finance Minister Nirmala Sitharaman says a deal with the US is close, adding that India's effective tariff rate is far lower than what is being perceived. India keeps Chinese automobile makers out of the new scheme to promote electric car manufacturing. The government invites other global car makers to apply for incentives to make in India within 4 months.
It's not good enough having a duopoly or one carrier or two carriers. You must have competition in every sector.
The telecom sector needs more competition, says Union Minister Jyotiraditya Scindia. The statement comes at a time when Vodafone Idea is seeking relief from the government on outstanding dues worth over 80,000 crore rupees. Pharma major Novodis launches its weight loss drug Wegovy in India. Prices start at more than 17,000 rupees for a 1-month course. The Navi Mumbai airport, run by Adani, will charge a user's development fee of 620 rupees for domestic passengers. This is 3 times higher than compared to the fee at the Mumbai airport. International passengers will pay 1,225 rupees, which is 2 times more than the current Mumbai airport. Software major Salesforce unveils a significant update to its AI agent platform, promises more visibility and control for businesses who rely on AI-driven automation. The top story this evening, a tenuous truce in the Middle East just 3 hours after President Trump claimed to have brokered a deal between Israel and Iran. Israel's defense minister has accused Tehran of launching new missiles in violation of the ceasefire. Now, Israel said a fresh barrage of missiles were launched from Iran and sparked air raid sirens across the country. Minister Israel Katz ordered the country's defense forces to respond to Iran's violation with intense strikes in the heart of Tehran. However, Iran denies Israel's claims. According to Reuters, Iranian officials have denied firing any missiles at Israel. Hopes that the ceasefire will hold, sparking a sharp drop in oil prices and a relief rally across global stock markets. In fact, Trump's announcement of an end to the 12-day war came after Iran retaliated against the U.S. strikes on its nuclear sites by attempting to attack U.S. military base in Qatar. Iran's missiles were intercepted over the skies of Doha, and the U.S. officials reported no casualties. President Trump told NBC News, and I quote, "The ceasefire is unlimited and it's going to go on forever. I don't believe that there will ever be shooting at each other again." Well, that is the latest there as far as the Iran-Israel ceasefire is concerned. Crude oil prices, meanwhile, trimming losses after Israel's claims that Iran had violated the ceasefire. However, oil prices are down 10% and they're on course to levels seen before the latest flare-up in the Middle East. Manisha is standing by with more details. Manisha, there was a lot of fear, a lot of concern on what the Iran-Israel conflict could mean as far as crude oil prices are concerned, and today down 10%.
Well, thank you for that. I'll start with the price action first, where we saw 7% of a decline in the overnight market. And then Asia, Europe today also saw yet another 3 to 4% of a crack coming in for the prices. So with this now, we are down by 14% from yesterday's highs. And also we are trading right at 2-week lows at the level where we were before the Israel-Iran conflict started there. I want to take you through 5 pointers on what has really led to a decline for crude prices. One, it clearly has been the U.S. president announcing a ceasefire between Israel and Iran. While we still see those statements coming in on perhaps a violation here and there, but the point being that a lot has been said and we have seen prices go in for that correction there. The second is about Iran's retaliatory strike on Qatar's U.S. airbase, but we do understand that there were no casualties and the damage was minimal, so the market's really not counting that in. The third point is that the most critical Strait of Hormuz as of now will not be closed. That clearly was an extreme action that the street was looking at. With that also out of the way, way, at least for now, we're looking that also coming off in sense of premium in prices. The fourth point is about OPEC and allies, which have yet again reiterated that they are looking to increase production all the way until the month of November. And within all of this conflict, there comes my fifth point, and this one comes in from IEA, which said that they're holding 1.2 billion barrels of crude as an emergency fund and can deploy it into the markets if need be. So all of this really assured the market and is the reason you've seen that premium come off from the crude prices.
Well, that is right. Crude prices coming off very sharply. Manisha, many thanks. And stock markets also staging a rebound across the world, but the gains were limited in India. The Sensex and the Nifty closed marginally in the green as the rally lost steam in the last hour of trade. The Sensex fell 900 points from the intraday high. 82,055 is where it closed. A flat close for the Sensex there. The Nifty closing in the green, up by about 72 points, closing above 25,300 intraday for the first time in 2025. That was the story as far as the Nifty was concerned. So we'll be standing by now to take us through the market action. The mid-caps, of course, outperformed again, up by about 400 points. So it'll be a relief across global markets on the back of the truce and, of course, the expectation that this could perhaps be the worst and it could be behind us.
Well, a day that will be described as disappointing given what a solid global backdrop we started with that ceasefire being announced and global markets absolutely raging and ripping higher. But what started off as a 250-point gain finally fizzled out. The Nifty did manage a little bit of green, but just could not hold on to the morning momentum at all. Relatively speaking, mid-caps were better. The mid-cap index at least had a gain of almost 0.7%. The advance decline ratio was also positive. More than 2 stocks advancing for every one that was declining. So that was a silver lining. But the fact is that the index, the Nifty itself, is unable to punch through the recent trading range. The top of that range comes in around 25,200. And that's now turning into a bit of a resistance because the market is not able to take it out on the way up. Let's talk about the gainers then. On the Nifty, Jio Finance, Adani Ports, Shriram Finance, Grasim, Tata Steel. These were stocks on the way up. The banking part of the market actually did much better. Bank Nifty was outperforming the Nifty, and you had gainers in the form of Kotak Mahindra Bank, SBI, HDFC Bank. On the losing side, ONGC, Power Grid, ONGC for obvious reason because of the collapse in oil prices overnight. Trent lost some ground, NTPC was lower, and giants like Lever and Reliance, they did not really fight for the bulls today. They were flat to slightly negative. Let's talk about IT. Now, this is where things turn. IT stocks opened the morning with a flourish, but by the time we closed out, they were all either flat or slightly negative. Names like Tech Mahindra, Infosys, all of the fuzz or the fizz really fizzling out, I should say. Now let's come to mid-caps. That was a silver lining today. The gainers included names like GE, Vernova, T&D, Kajaria Ceramics, Smart, 5-6% move coming in towards the close. Some of the financial names like JM Finance, Edelweiss up 4-5% as well. And the rice makers, LT Food and KRBL, were up and about as well. Remember, some of the Middle East markets are very big exporting markets for these rice companies. KPIT Tech has issued a mid-quarter warning of sorts, basically putting out a mid-quarter update highlighting some business concerns. That's why that stock was down about 5%. And finally, on the flip side, defense stocks today came in for some profit taking. So names like HAL, BEL, BEML, particularly BEML, was down about 7%. But even private sector names like Data Patterns and Zentech on the lower side. So okay day for mid caps, slightly disappointing for large caps. And we'll see once the geopolitical headlines settle, then the market will go back to taking a closer look at trade and in particular that India-US bilateral trade agreement.
All right, so many thanks. In fact, that's the story we're now moving on to. India is keen but not desperate to sign the US trade deal before the 9th of July tariff deadline kicks in. Sources tell CNBC-TV18 that negotiations are stuck on agriculture, dairy and genetically modified crops. Abhimanyu standing by with more details. Abhimanyu, take us through where things are currently stuck and what the government's position is on the US-India trade deal.
Negotiations between India and the United States are still underway as both the sides are still keen on signing an interim trade deal before the 9th of July but are not desperate. That's the broad message so far from the ongoing deliberations. A government official has told CNBC-TV18 that the India-US trade deal is currently stuck due to issues pertaining to access for agri and dairy products and GM crops. While the United States is insistent on lower duties for agri and dairy produce and a broad access for the GM crops in the Indian market, India is unwilling willing to allow so. The government official further said that there will not be any compromise on India's national interests, adding that tariffs may revert to 2nd April levels if a deal is not reached by the 9th of July. Government sources have also said that earlier tariffs may also imply a competitive advantage for India vis-a-vis its competitors which export to the United States.
Abhimanyu, many thanks. In fact, Finance Minister Nirmala Sitharaman says India is close to signing a trade deal with the US and the EU. Speaking at an event organised by the Exim Bank, the Finance Minister said India's effective tariff rate is not as high as it is being perceived.
For all of us, or those of us who still believe in the commentary which was made in the US that India may be the tariff king, no, I want two things to be remembered. Given our system of things, we seek parliamentary approval for deciding on the tariff rate. You obtain from the parliament the permission to go up to a certain level. But effectively, you are at a far lower level. 7 tariff rates have been removed in this budget, reducing the total to just 8.
Well, that's the Finance Minister. Now, the government has invited global car makers, except those from China, to apply for incentives to make in India within 4 months. Government officials have said that 4 to 5 companies have shown interest. Parikshit is standing by with more on the new EV manufacturing scheme. Parikshit, so make in India, but not to the Chinese.
Definitely not. In fact, the government has started sending invitations to all nations through their embassies, telling them that if there are companies in your countries who want to apply, please ask them to do so. Please sensitize them about the scheme. They've sent letters to all global OEMs, including Tesla. But on the question of China, the government is very clear that China shares a land border with India, and there the Press Note 3 is very clear. Press Note 3 in 2020 had said that no investments from land border countries, including China, can happen through the automatic route. It has to mandatorily go through government approval. And we've seen since 2020 that very few approvals for Chinese investments have gone through. And it's on a case-by-case basis. The government is very clear that they will not allow Chinese investments automatically. Now, let's look at BYD for that matter. BYD has been proposing to set up a plant in Telangana at a cost of 85,000 crores. That cannot happen without the approval of the government. Look at MG Motor. MG Motor had applied for the PLI scheme a few years ago, but that application is pending with the government. Their FDI application has been pending with the government and has not been cleared either. Considering the kind of stand the government has taken with these Chinese car makers in the past, it is unlikely that any Chinese car maker is going to be allowed through this scheme. Now, what is going to happen? Well, any car maker who applies, they have to do so now within 4 months, and after that in October, the window closes down. They will have to give a commitment of 4,150 crores, and they will have to commit to start manufacturing in India in 5 years. Until then, till they start manufacturing, they'll be allowed to get 8,000 cars from abroad, electric cars into India, fully built cars at a reduced duty of 15% as opposed to 100% currently. So the government believes this is going to be a win-win, and somehow they believe that this will still be attractive to OEMs after the FTA concessions in the auto sector.
All right, Parikshit, appreciate you joining us. That's the latest there on the government's new EV manufacturing policy. Chinese car makers likely to be kept out. The government is expected to finalize a rare earth magnet manufacturing scheme within the next 10 to 15 days. Now, this comes after China curbed the export of these magnets, which are critical for EV manufacturing. Sources say the new initiative will have an outlay of 1,000 crore rupees and support capacity of 1,500 tons of rare earth magnets. China has relaxed the import curbs for the US and European automakers, but no word yet on export requests placed by India's EV makers. The Secretary at the Heavy Industries Ministry, Kamran Rizvi, has said India is in talks to import rare earth minerals from Japan and Vietnam. Take a look.
Are we looking at any other countries where we can source the item except China?
So you are aware that rare earth is available in Japan, in Vietnam, and efforts are going on to bring from there.
The operations at Hyundai's Chennai plant remain unaffected despite ongoing wage negotiations with its workforce. Sources tell CNBC-TV18 the South Korean car maker is likely to reach an agreement with its recognized trade union on a long-term wage settlement soon. Telecom Minister Jyotiraditya Scindia has called for more competition in India's telecom sector. Speaking at an event, Scindia said the sector cannot afford a duopoly and there must be competition across all segments. The statement comes at a time when Vodafone Idea is seeking relief from the government on outstanding dues worth over 80,000 crore rupees. The minister also urged device and chip makers and original equipment manufacturers to help produce network and user devices at affordable cost to prevent a new digital divide. Take a look.
Today we have fiber, we have broadband, we have Wi-Fi, we have mobile, and soon enough we will also have satellite. Our job is to provide as many avenues as possible, and within each vertical as well, provide intense competition. It's not good enough having a duopoly or one carrier or two carriers. You must have competition in every sector. India today is probably the only country in the world with 4 telcos.
Well, that is the telecom minister saying more competition, the need of the hour. The deadline to submit bids for bankrupt Jayaprakash Associates ends today. There are 25 suitors, including the Adani Group, Dalmia Cement, Jindal, Oberoi, Pathanjali, among others. Ritu's here with the race for JP Associates. Ritu.
Well, yes, the deadline to submit bids for Jayaprakash Associates under the bankruptcy process ends today, and this one is being watched very closely. There is a massive amount of debt that is at stake, and while the deadline has already been extended before, banks are now hoping that at least a few serious bidders will step up. We had reported earlier that as many as 25 entities had submitted expressions of interest to acquire JP Associates under IBC, and the list includes some big corporate names like Adani Enterprises, Dalmia Cement, Jindal India Power, Oberoi Realty, Patanjali Ayurveda, Torrent Power and Vedanta, just to name a few. And apart from corporates, a number of financial players and asset reconstruction companies had also shown interest. So names like Autham Investment, Oak Tree, JC Flowers ARC, Kotak Alternate Asset Managers and so on. Now the window to submit the final bids closes tonight, and the bids are expected to be opened by the lenders in their meeting tomorrow. Now Jayaprakash Associates, as you know, is the flagship company of the JP Group. It has presence across real estate, hospitality, cement, engineering, construction and others, and it was among the list of companies that was identified by RBI to be sent to the Insolvency and Bankruptcy Court back in 2017, and after a long winded process, it was formally admitted to the Bankruptcy Court just last year. The company is facing claims of more than 57,000 crore rupees, and now all eyes are going to be on how this bidding war plays out, especially with such high-profile names in the mix.
Ritu, many thanks. Digital payments major PhonePe formally kicked off its IPO process. Sources tell CNBC-TV18 the company has hired a slate of top global and domestic banks to manage the issue. Rachna is here with more on PhonePe's journey to the Lal Street. Rachna.
While digital payments major PhonePe is dialing up its IPO plans, CNBC-TV18 has learned that the company has hired Kotak Mahindra, JP Morgan, Citigroup and Morgan Stanley to manage its upcoming public issue. Now, PhonePe is looking to raise $1.5 billion and is eyeing a valuation of up to $15 billion, making it one of the most anticipated listings in the fintech space, especially this year. According to sources, the company plans to use the IPO proceeds to scale up its financial services, invest in new verticals and pursue strategic acquisitions. PhonePe, founded in 2015, was later acquired by Flipkart as we know it. It became a part of the Walmart ecosystem after the US retail giant bought Flipkart in 2018. Now, the company was demerged from Flipkart in 2023 and shifted its base from Singapore to India, a crucial move to meet domestic listing norms. CEO Sameer Nigam, in an exclusive conversation with CNBC-TV18 in May, said that the company is now ready to embrace the transparency and accountability that comes with being a listed entity. PhonePe has raised about $850 million post the demerger in funding in 2023 at a valuation of about $12 billion. Major investors include General Atlantic, Ribbit Capital, Tiger Global, TVS Capital Funds, and Walmart, which remains its majority shareholder. Meanwhile, Flipkart, Walmart's other Indian bet, is also gearing up for its IPO and has already completed its Singapore to India domicile shift, as we had reported earlier this year. Now, we will be keeping a close watch as both these IPOs move forward.
Well, both big IPOs at that. Rachna, many thanks for joining us. Up next, pharma major Novodis launches its weight loss drug Wegovy in India. Prices start at more than 17,000 rupees for a one-month course. That and more when we return. Danish drug maker Novodis has launched its weight loss drug Wegovy in India. The drug is currently under distribution and will be available in pharmacies at the end of June. A 4-week prescription of the lowest dose of Wegovy will cost over 17,000 rupees. Consumers will have to pay around 26,000 rupees for the highest dose. This is almost twice the price of Eli Lilly's weight loss drug Mounjaro. Wegovy and Mounjaro, the only weight loss drugs available in India currently. Speaking to CNBC-TV18, Novodis India MD Vikrant Shirotia explained the possible side effects of the drug. Take a look.
When it comes to the eye, you know, the case is actually 1 by 10,000, and we have actually really not seen any causal relationship with it. It has not been reported in many of our clinical trials across, at least the STEP trial, which has happened for semaglutide. And we have also not seen the raised calcitonin levels. But again, the patients should take it under the medical supervision. If there is a risk of thyroid carcinoma, it's part of the weight loss journey. Even if suppose somebody tries to do a weight loss with diet, exercise, or any of the therapies across, muscle loss is a part of it, and we have seen this 25 to 40% muscle loss.
Well, that's Wegovy, Novodis weight loss drug that's now officially launched in India. The black box of Air India's Boeing aircraft, which crashed in Ahmedabad, is in India. Aviation Minister Ram Mohan Naidu said the black box is being examined by the Aircraft Accident Investigation Bureau. The air crash left 275 people dead, including 241 passengers and crew members. So there was speculation on whether the black box would be sent to the US, but as of now, the government maintains that the black box is being examined here in India. The Navi Mumbai airport, run by Adani, will charge a user development fee of 620 rupees for domestic passengers. This has been approved by the airport regulator. Now, this fee is 3 times higher compared to the fee at the Mumbai airport. International passengers will pay 1,225 rupees, which is 2 times more than the Mumbai airport. Madhya is standing by with more details. Madhya, why do airports charge the user development fee, and how does the UDF vary across different airports across the country?
Well, UDF, or user development fee, as you mentioned, is a charge levied by the airport operator on the passenger, which is included in the ticket. So the original practice was to charge UDF on departing passengers. But in the last few years, we've seen airport operators bring new structures for collecting UDF from passengers. But before I tell you about what the structures are, here's what Navi Mumbai Airport will charge when it starts operations, which is expected later this year. So domestic departing passengers at Navi Mumbai Airport will pay 620 rupees, while international departing passengers will pay 1225 rupees for arrivals. UDF is 270 for domestic passengers and 525 for international travellers. Navi Mumbai Airport is owned by the Adani Airports that controls 7 other airports, including Mumbai, Jaipur, Ahmedabad, Guwahati, Lucknow, Tiruvananthapuram, and Mangaluru. The other trends that started with Adani Airport controlled Mangaluru Airport to levy UDF on arriving passengers. So the GMR group that owns Delhi Airport brought in the class-based UDF for international passengers. So Mangaluru Airport is charging domestic departure UDF of 735 rupees with arrivals at 315 rupees. International departures UDF at 1120 rupees and arrivals at 480 rupees. Moving on to Delhi Airport, which brought in class-based UDF for international passengers. So economy class travellers pay 650 on departure and 275 on arrival, while business class passengers are charged 810 on departure and 345 on arrivals. Finally, at Mumbai International Airport, the UDF also varies for classes. For international passengers, economy class departure UDF is 615 rupees and arrivals at 260, whereas business class passengers pay 695 on departure and 304 on arrivals. So what airports are doing is keeping domestic UDF on the lower side and charging international passengers more depending on the class, which is economy and business, and arrival and departures. Airports claim they need higher capital to undertake development and expansion activities, and hence the higher UDF. Looking at the trend, passengers should brace for similar fees at other airports as well.
All right, Madhya, so get ready to shell out more. This is going to have to be borne by you and me as paying customers who are travelling by air. With that, it is time for us to wrap up this edition of Business 360. The news will continue on CNBC-TV18. Stay tuned. We're back in a minute with more.